So are there some common misconceptions that you've seen business owners have with regard to their various options of financing available to them that you can share, help shed some light on, and maybe make them not so much misunderstood?
Yes. So the very first misconception I see out there is that SBA financing is horrible, that it's a long and tedious process, that the documentation, I'm going to be filling out a phone book of forms, and that's really not true. The SBA has streamlined things as much as possible. I can tell you that since the downturn in 2007 and 9, that all the banks the regulators have kind of put the clamps down on them anyway. So the documentation isn't that much more complex than doing an SBA than it is doing a bank loan. So that's a misconception. The second one is the SBA products are actually developed to help small businesses. That's why they're there. You can put less money down. You can utilize projections that get you to cash flow. They take a lot of the risk away from the bank, and as far as if the loan defaults, we will actually be on the hook for a certain percentage, and the bank's not 100% responsible. So the SBA is offering these products that actually help the customer. Mm-hmm. And again, I have so many customers that'll come back, oh, I don't want to do an SBA because I've heard horror stories that like 10 years ago. Well, it's different. It's different now. Two of the other things that I have misconceptions on is hard money lending. And I can tell you that the hard money lending, I put hard money lending in a couple different buckets. There's another group of hard money lending that are like they do factoring, or I call them the ACH microloans, where they'll give you money that you can get within 3 business days, but they'll look at your bank statements and they're charging you credit card rates like 17, 20, and up. And that's just it could be a death blow if your margins for your company are 20, 30%. You just wash that away with that financing. And that to me is really hard money lending, where folks like you have a product and a niche that really is pretty comparable to that 4th tier of SBA lending, because those 4th tier SBA lenders are going to be probably in the 6s with a 3-year prepayment penalty and some fees, where you don't have a prepayment penalty, and you're going to probably be starting maybe around that area or a point higher than them. And to get them to that next level, it's an excellent product. That's a big misconception is the hard money lending product. It's definitely a bridge to get you to where you need to be. It's another financing tool that you can utilize that definitely helps you. And then the other misconception is we have so many different businesses that don't really know where they are with their books and their accounting. It's one of those things where I always tell people they don't know what they don't know. And most companies start out with a spouse or a friend or somebody doing their books, and they get to a certain point where they've grown their business. And usually what I've seen is there's a kind of a benchmark of once people start having gross revenues of $1 million or more, the ball game's different. They're not in the kiddie pool anymore. They've jumped into the deep end water, and now they're probably over their expertise on a lot of things with running their business and their books and their accounting practices. That can be anything from, do they have the right corporate structure entity set up for their business? Are they doing cash or accrual, or are their books being tied out on a monthly basis, so that you can understand and be proactive and know exactly where you are at any time? Managing your cash flow is a biggie. All of those things that if you had somebody that's experienced and can help give you some advice on a direction, that's always a lot more helpful, and it's going to save you a lot more money in the long run.
Yeah, so might cost a business owner some expense to hire that expertise, But compared to the savings and interest and loan fees, by being able to get yourself set up to get those low interest, long-term qualifying loans, right? That can be a huge game changer.
Oh, yeah.
And not only just save on interest compared to maybe more expensive loans, but be able to let you borrow more that can really let you scale your business perhaps. And not to mention, just I think one of the things also that you can do, your CFO services can do, is really help the business owner. They're an expert at their business, what service they're providing or product they're providing, but from a perspective of how can you grow this business, right, from a business perspective, or leverage, look at financing or equity or whatever, those different options. So there's lots of potential value from that, I think.